Hi, welcome. Just trying to do my hairdo. It's a bit of a bad hair day, so thank you for that. We at Proact, we're always looking at um, the issues in terms of what makes you tax resident and what is tax liability, and it's impacted as well. It's impacted by I don't know why the internet feed on this is very slow, so sorry about that if it's causing you any difficulties. We're looking at inheritance tax in Cyprus for expats, but it's not just about Cyprus, it's about expats around the world. So UK expats, your domicile determines whether you've got an inheritance tax liability. So your domicile is where you're from. It's where your parents are from, where you were born, maybe. But it could be from where your parents are from and not necessarily where you're born if you're born overseas. But it's also where you live. So any expat living in the UK for more than 15 years as a tax resident is deemed to be domiciled in the UK and therefore be liable to inheritance tax in the UK. So expats in the UK can take heed of this because of their domicile of origin. They've got potential ways of protecting themselves from inheritance tax. You don't have, Cyprus has got no inheritance tax at all, no inheritance tax on any estate. But you don't have to be tax resident in Cyprus to enjoy the benefits of zero inheritance tax in Cyprus. And we'll explain that as we go on. Okay. So subscribe to the channel to follow up and see the associated bits of information regarding this. And then contact us at Proact Partnership if you want to find out more about what we're talking about. We do a Twitter space once a week as well, around about the same time. So I'll feature some of this YouTube Living Working Abroad channel video, but also going to cover some other things, look at the recent tax case against Gary Lineker in the UK. So thanks for joining us, and here we go. In Cyprus, there is no inheritance tax per se. So it's long since been abolished. And if you're not from Cyprus, if you're not Cyprus domicile, you've got some extra tax planning opportunities. If a UK expat or any expat relocates to Cyprus, your home country rules of inheritance tax still apply. Now, if you're expat for a long time, so in the UK 15 years, so somewhere between 15 and 20 years, you can change your domicile. If you change your domicile, then where you change your domicile to becomes your country which applies inheritance tax. So an expat who is based in Cyprus for up to 20 years can change their domicile to Cyprus and become benefit from zero inheritance tax on their worldwide assets. Okay. Now, being of UK origin, that there is a question mark about that. But essentially, if you're domiciled in Cyprus, it's zero inheritance tax on your worldwide assets, and that can be for anybody who's lived and worked in Cyprus for that 20 years. So that's one of the approaches you could adopt. That could be a long and happy retirement, or it could be a long and arduous working life. Either of those options are available to you. UK expats always have a 40% inheritance tax liability, and that is charged to the estate of the deceased. Some other countries charge inheritance tax on the recipients, the beneficiaries of the estate. Many countries charge it on the estate of the deceased. So it's where the deceased is domiciled that takes effect. If you're British domicile, for example, and you change your domicile, you're still, and you're an expat, you've still potentially got an inheritance tax liability to UK-based assets. So even if you're not domiciled to the UK, you've still got UK assets liable to inheritance tax. Now, there's an allowance for that, 325,000 per person, potentially a main residence relief, but that is beneficial for expats living in Cyprus. It's not it's beneficial for expats living in the UK, but not for expats that are abroad necessarily, because the main residence rule doesn't necessarily apply. So it's something to consider. So, in summary, if you change your domicile over the long term, which means becoming a resident, becoming a permanent resident, taking up citizenship, and being a tax resident for 15 to 20 years in Cyprus, then you become subject to Cyprus inheritance tax rules when you die, and that's zero inheritance tax on your worldwide assets, subject to individual country rules which might apply some tax on fixed assets in those locations. So that's a good plan. Non-DOMs in Cyprus straight away as tax residents can get income tax and savings tax benefits straight away. That's another story. You need to subscribe to our YouTube channel, Living and Working Abroad, to find out more information about that. So the next part I want to consider in this review about what if I'm not living in Cyprus, or what if I'm not living in Cyprus for 20 years? How do I protect my estate against the inheritance tax? We've seen over the weekend the unfortunate news that Paul O'Grady's died. Suddenly and peacefully in his sleep with his family. Good luck to him and well done. But we don't know when we're going to die. He was working last week, and now he's no longer with us. We don't know when that's going to happen. So you may not want to wait 20 years before taking action on making inheritance tax planning and managing your wealth to protect your family and business down the generations as well as cross-border. So how can you do that? How does Cyprus help you do that? Cyprus law is based upon English law. English law is around the world, and that allows for trusts. So John Paul Getty, for example, was born in the late 18th century, around 1892, and he was a self-made man, made his money in oil in America, and then finally died in 1976, an old man with a £2 billion estate. He left it all into trust, not to the family. Now, the probate then took 6 years, but it proved to be sound, and his whole £2 billion estate was put into trust, which endures today for the benefit of his family down the generations. So his grandchildren and great-grandchildren now are able to benefit from that estate. With a trust, there's no probate between the generations. So inheritance tax is charged when there's a probate administration. Not with a trust, there is no probate administration. Therefore, there's no subsequent charges on inheritance tax. So the potential, and John Paul Getty died 1976, the potential inheritance tax charge then, but later on, once that his estate is settled into the trust by 1982, his estate is free of any further probate or inheritance taxes. So that's an opportunity, A, to make as much money as he did, and he made his first million by the time he was 23, God bless him, and B, to protect your family wealth and your family's business wealth down the generations. And this is where Cyprus can help expats living and working abroad around the world. Under American law, allows trusts in a similar way to the Britain. Cyprus as well. Now, Cyprus have an international trust, and that opens options for expats around the world to create an inheritance tax fund, your own family wealth fund. So, for example, we looked at Gary Lineker this week. He was challenged as saying that no, you're an employee of your corporations. You're an employee of the BBC and of BT Sports. He's saying, no, I wasn't. I was operating through my own personal service business. Okay. And that's the case that he was able to win because he's operating through his own personal service business. He was able to argue that he was free to operate a separate legal entity from that as an employee. So when you create a separate legal entity, you create a separate um, tax regime for yourself. And this is what you do when you go expat. So if you're living and working abroad, your tax residence can change. However, you can have your personal service company or your family trust that has got a separate tax resident in the same or a different jurisdiction. So any expat not tax resident in Cyprus can create a Cyprus International Trust as the holding structure, the holding company, for want of a better word, of the international assets that you've got. That can include your personal service company. It can include your property in Cyprus and abroad, and it can include your investments and your investment funds. So there's a wide range of things that it can cover. And it doesn't have to have any tax liability at all on that worldwide assets. There's definitely no dividend tax on that international trust. So an expat working abroad with their personal service will create no dividend tax when that's being paid into the trust. A trust can pay money out, and that might be income where you are tax resident. That's a different issue. But a trust can also loan you money. And as we said in our series on our Living and Working Abroad channel, the the family business and the family trust can own the assets. You don't need to have the property and the business shares in your name for you to be able to hold those assets. Going back to Getty, I mean, they're famous for their big art collection, held in the trust. That's how they hold their value. It's not all cash in the bank. It's art to look at. I don't know if Getty owns some Pollocks. They may own a Pollock or two, and which can be worth 30, 50, $100 million on their own as established works of art valued by many. So the trust can own a range of assets. It can own your personal service company shares, wherever that company is based. It can own your property, wherever that property is based, and it can own your investments and your valuable assets wherever they're based. And that gives the opportunity for you to give them a tax residence in the Cyprus Trust in Cyprus. And that gives the opportunity for your family business to avoid inheritance tax in Cyprus. Cyprus International Trust is exempt from any Cyprus taxes. There's a potential liability to taxes if you become tax resident, but again, that can be managed and it doesn't have to be applied straight away. There are some conditions, and if you do want to become an expat resident in Cyprus, you need to set up the Cyprus International Trust before. You don't need to be in Cyprus, and in fact, there's more benefits to not being, as long as you're working in an established location to protect your capital. For example, if you're working in the Middle East with your personal service company, then trust law doesn't apply in those countries necessarily. But you could have zero income tax liability, but potentially inheritance tax is still going to catch you. So the Cyprus International Trust creates that break to protect your personal service company and your property assets owned in the trust. So it's a way of protecting the wealth of the family in the estate. It also avoids the costly delay of probate. So when somebody dies, a probate administration has to take place to transfer companies, shares, and property into to the beneficial owners. Once it's gifted into trust, that transaction has taken place. You don't need another probate administration. You don't need a tax assessment, and that's part of the benefits of doing using a trust. So once it's in trust, it's protected across border and down generations from inheritance tax assessments, and with no Cyprus tax being applied to Cyprus International Trusts. So let's next have a look at some of the considerations, or wider considerations. So if you're using a Cyprus International Trust, it's regulated that there are things that you need to do, but a trust document is in effect the title deed of the property that you own, or the memorandum and articles of the company that you form. So that's what the trust deed is. It can be created, it can be quite complex or quite simple, and then you can make gifts to that. Making the gifts is a relatively simple process. However, under international anti-money laundering law, the transfer of assets and the regulation of those has to be recorded and registered. It's quite secure and discreet in Cyprus, but it still has to be registered and logged. So the stamp duty is to be paid on creating the trust, about $500. But beyond that, the register of beneficial owners needs to be maintained. Now, again, with trust, there's lots of opportunities to manage that, to be discreet, to retain that ownership, and you can have the nominated beneficiaries rather than attributed beneficiaries if that is tax efficient for you. So it's legal, it's above board, it's internationally verifiable in tax law and Cypriot and European law. Let's consider now who controls the family trust. The way they're written is down to you, and we can help you, a ProAct partnership, to write and protect your family assets and business in the trust. So the family, the settler, the person creating the trust, can have the ultimate control. There's a lot of stuff in the news at the moment about the new and final series of Succession. For those of you that watch Succession, you see all about family trust and the squabbling that goes on for inheritances. It's not funny sometimes, it can delay things. But the settler does have some control over, can be written in with some control over how that estate is going to be written. It can include welfare if there's long-term care needs in old age. You can also set up what's called a protector for the trust. The protector is like a chairman of the board that can overrule or replace trustees at any point if not happy with what they're doing. The trustees are the ultimate controllers. They're the board of directors of that. And there has to be a local trustee that is a resident, a tax resident in Cyprus for the trust, and that's a service that ProAct offers. So it's like operating an international company. That the trust needs to be registered of the beneficial shareholders and the ultimate beneficiaries and the source of funds, and make that tax return each year. So it's like operating an offshore company as a holding company, except that you've got no taxes, no corporation taxes, inheritance taxes, and you've got no other taxes in Cyprus available. So in summary, Cyprus is a great place to avoid inheritance tax. Expats that live in Cyprus long term can change their domicile with their permanent residency, citizenship, to become domiciled in Cyprus and hold their worldwide assets there. Any movable assets, any financial assets, would always be deemed to be where you are when you die. So if your property and financial assets are all owned by you as a Cyprus domicile, long-term dual domiciled resident, then there's no inheritance tax for the expat. On a shorter-term basis, Cyprus can use trusts to allow expats from around the world to protect their family business and capital and property assets from trust in that very, very long term. Private are expat experts to help you protect your capital from in the long term from that proposition. There is a cost to creating a trust. There's a cost to administering the trust. So it's simpler, but not that much, not completely trouble-proof in maintaining the trust. It's simpler than a company, but it still needs its tax registration and register of beneficial owners to be declared and known and controlled for anti-money laundering regulations. However, it's got the flexibility that, unlike a company shares, there's no probate that's required and no change of ownership that's required at any time in the future. So there's no capital gains and there's no inheritance taxes on the assets that are held by the trust. And yet the family can still benefit from that. It can protect for long-term care, ill health, it can provide school fees, it can provide income down the generations. You can protect what you built up to make sure that it's not squandered by future generations in your succession, and your family can retain control through protectors, settlers' wishes, and the trustee and the board of trustees. And though that can work for expats anywhere around the world. So even if you're working in a high tax country, you can still use a trust to create that level of tax protection for you. For more information and guidance, contact us at productpartnership.com. Don't forget to subscribe to our channel to see more mini vlogs where we go a deep dive into some of the specific issues that are involved. And don't forget to listen next time when we continue our tax and residency series for expats living and working abroad. If you're interested in Cyprus, we've got a Cyprus office at Proact and we can help you there. Contact us at productpartnership.com. Thanks for listening, and we'll see you again next time. Lost my mouse. Bye.